I don't believe necessarily that today's move with the 10-year Treasury, had as much to do with the election. But you never know. I mean, I think institutional traders are trading the macros on the economy and the data, and that was a great breakdown on Friday before the bond traders, the smartest people on Wall Street, got it right.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Back at the desk, off the road. NBA Annual was a fantastic trip. And you know what? It's a pretty light week here. There's not a lot of news coming out. Oh, wait a minute. There's an election tomorrow. And the Fed is coming out. And we got some economic reports. And we have the end of political memes and direct mailers and commercials. There's a lot going on this week. And we're in a new month in November. So let's have some fun with it. I am excited about all the political ads going away. That's one of my favorite things about this week. So let me just talk politics, which is something I don't normally do because I can't stand it. I have a libertarian streak in me, although I'm fiscally conservative and socially moderate. And I think that's probably like most people in America. I think like 60% of America is like fiscally conservative and socially moderate. So we're a lot more in common than most people think. But let's exercise some EQ, emotional quotient. It's like emotional intelligence. You're not changing anyone's opinion. Someone who is Catholic today, you're not going to talk them out of being Catholic tomorrow. And who they vote for, they've probably already decided. I actually am curious down below. If you are truly undecided, when you wake up Tuesday morning and you see my video on LinkedIn, or if you're up late with us on the West Coast here, although it's not too late, it's not even 9 o'clock yet. Are you undecided? I'd love to hear if there's anyone undecided here. And then everyone else just like, tell them what you think. Just kidding. I'm not trying to start a war here. I know people get passionate about single issues and, gosh, I read some poll that like 47% of Americans just don't like Trump. And so, a lot of people just aren't going to vote for him because they just don't like him. So, whatever your issue is, let me just say this. Probably not a lot is going to change, assuming that the Congress, both the House and Senate, kind of stay about where it is, which is not really majority controlled. That's good for business. Gridlock in Congress is good for business between the House and the Senate. And so, yes, executive orders could be made by whoever the next president is. And, it's something we're all going to live with. Having said that, our business and a lot of our focus and what our careers and livelihood really depends on has probably a lot more to do with what the Fed is going to say, not just Wednesday, Thursday, which normally they do a Tuesday, Wednesday meeting, but because of the election, they're moving it back. But what they say on Thursday during the Q&A, and if they do actually cut another 25 basis points, which I predict that they will we continue that trend, the downward trend we've seen of interest rates, mortgage interest rates, literally for a year. Since last October, we've had lower rates. Now, we have had quite a spike in the 10-year Treasury and mortgage interest rates since the last Fed meeting. And the reason why is because, the institutional bond traders are still fearful that the economy isn't as weak from a labor standpoint that the Fed has thought, and that inflation has not been tamed as much as the Fed has thought. And so there's also a lot of positioning of money prior to things where we require certainty to decide where to invest, like who the administration is going to be, who's going to control the House and the Senate, and really what are the priorities that whatever the next administration will be, what they'll be focused on the next 4 years. Another thing I brought up quite a bit is something called the peace dividend. We don't have peace right now. We don't have peace in the Middle East. Our shipping lanes have Houthi rebels like blowing up and hijacking ships and having to force trade to go all the way around the south around Africa instead of going through the Strait of Hormuz. We have a war in Ukraine still going on. Israel has kicked off a fight against Iran, and they're fighting also inside Lebanon. So there's just a lot of uncertainty, and so a peace dividend, when there is peace in the world, which hopefully either administration that wins, that will focus on that. It's good for the economy when there's not a lot of is oil gonna go up or down, or what's the volatility going on with oil, because right now Israel could be attacking Iran and blowing up their oil infrastructure, which have obviously an adverse impact on oil prices, which hurts our pocketbook. So a peace dividend is also something that I think is on the ballot tomorrow. Which candidate will bring more peace to the world? And I think that is good for all economies. Global trade, stability, certainty. Can't control human nature. So that's it. It's been over 5 minutes. That's the most you'll probably ever hear me talk about politics. I just don't like ambitious, self-serving people that try to gain power for that sake. It's always been a turnoff. And I'm not talking about necessarily the presidential candidates. I mean, gosh, think of all the local elections and the Senate, and the Congress, and all the down ballots, and all the people that you see on TV, and you just like a lot of us are in sales. We can pretty much sniff out people, what they're like and what they're about. And there are a lot of frauds out there. There are a lot of people that just aren't real, and that's a big turnoff to me. But I don't care. I'm not gonna let it get to my emotions. My Cowboys suck, so I've already been defeated this year. And my Longhorns are good, so we have a shot at the national title. So we have balance, in my mind at least, for the two things that really get my emotions going, which is very hard to keep in check watching football. All right, what else is going on? The Fed, if they cut at 25 basis points, which the last jobs report seems to have solidified that. And I think today with the 10-year Treasury yield coming down pretty quickly, I think that the Bureau of Labor Statistics jobs report last Friday was finally digested, and people realized how really weak it was, and how the last report, which has caused some of the spike in rates, was not as strong as it seemed. Everyone's so quick to say, oh, there was a Boeing strike, which was 45,000 jobs, and there was 2 hurricanes that really hurt, the job report. And so let's just brush it off. But, gosh, Dan and Barry over there at MBS Highway, Barry Habib and Dan Habib, they really nailed it. I got caught up on their Friday video that they put out, which was a comprehensive insights on jobs report. And they broke it down so well. Now, let me tell you something. I love these guys. They're like me. They're dear friends. They're very positive about our industry, and they want the best for all of us, especially for, our livelihoods. But they're also very analytical. So, yes, the three of us are very positive about where we think things are going. But then they get very granular in the data. They broke down the jobs report, and they showed that for the October jobs report that came out on the first Friday of November last week, the 220,000 jobs, the labor force shrunk by 220,000 jobs. Okay, so because there's less people working or reported in the report, then you don't see the unemployment rate necessarily go up, because it's kind of like fudging the numbers. Where did those 220,000 people go? Did they just keel over and die? Did they decide I don't have to work for a living anymore? I won the lotto. So I don't know what the deal is. These reports are so weird. But the number of people employed decreased by 368,000 people. That is massive. And so, if you take the unemployment rate of 4.1% and you go out 3 decimal places, on September it was 4.051. I mean, literally, like, just as slim as you can get to be able to round it up to 4.1%. And then this past jobs report for the October is 4.145. So think about 4.051, 0.145. That's almost a full point difference in the unemployment rate, but both are 4.1. So, the labor report was not strong. It was not good. The Fed's going to cut 25 basis points. And I think the bondanistas, the bond market, the smartest people on Wall Street, I think they finally sniffed out what's going on with the jobs report. I don't believe necessarily that today's move with the 10-year Treasury had as much to do with the election. But you never know. I mean, I think institutional traders are trading the macros on the economy and the data, and that was a great breakdown on Friday before the bond traders, the smartest people on Wall Street, got it right. MBS Highway got it right. Speaking of oil, it's around $71. And speaking of the interest rate environment, by the way, the 10-year yield and 2-year yield, as much as the 10-year Treasury has gone up since the last Fed meeting, like over 60 basis points, the yield curve, the spread between the 10 and the 2, did not invert. It has remained uninverted. So remember, an inverted yield curve means that potentially there's a recession coming, and it did not. So it's been uninverted, and pretty much since the last Fed meeting, and it is still uninverted at 16 basis points. Nice little spread there. I'll say one last thing. I read a cool report from the TMS Spotlight and Les Parker, and they're very data driven. This is not, again, let's exercise some EQ here. If you're still with me at 10 and a half minutes, you have got the fortitude to listen to what I'm about to say and don't get in any feelings about your candidate. The way it was written was pretty well written. The interest rate outlook. Expect the 10-year yield to approach 4.50 or 4.18 by the end of the week. The bulls can reign again despite the wild rate swings and consequential news events. The market is ready for Trump because his campaign vetted its policy vision. The status quo is the best the market can assume about a Harris administration because its policies have not been clearly defined or tested by debate. Either side will be constrained by Congress. So just forget everything I just said about Trump and Harris. Just get out of that. Get that out of your head. Either side will be constrained by Congress, checks and balances, which will remain close to 50-50, even if the Republicans control both. I don't think it could have been put better. You shouldn't have felt anything when I said Trump or Harris. You shouldn't feel anything. You should just read the data and the facts and realize that logjam up there in Congress, which puts the check on the president, whoever it's going to be, is good for business. And that's the facts. Okay, one last thing. My favorite takeaway from the NBA from a policy standpoint was that the FHFA had announced some updates on loan repurchases. And I love this kind of annual scoring model. Basically, if you're a Freddie Mac seller servicer, which we are, and if you have Freddie Mac repurchases, if your default ratio is under 2%, you're in a good spot. They're not going to just hammer you with repurchases and make you, buy a bunch of stuff and spend a bunch of money. They are going to look at your quality of business over history, and they will have like kind of a step down tiered fee. So like the worse you get at quality production, the more your fee could be, and also depending on what the error is. So, to me, it's crazy that you have to repurchase the entire loan if it's performing over a loan defect. Guidelines are just that. They are not black and white. They are not hard where, hey, this is the only way that income is calculated. Do you know how many spouses are not on loans, or people have side hustles where the income can't be counted? So I would just say that if a loan's performing, probably don't need to buy the whole thing back. So I love the fact that we are moving towards a little bit better framework to use a little more common sense on that, which is great. And look, Fannie and Freddie, they're both really well capitalized. I mean, tons of money. I went over their financials last week. One last thing before we talk about the state of who we are as a nation and where we're going to be at the end of this week going forward. This is the greatest country on the planet. And if you don't feel that, you have to do some real looking in the mirror yourself. This is the greatest place to live. Yes, we all have tough times. We go through bad times. But did you know the poorest state in America is Mississippi? And the average person in Mississippi is more wealthy and has more money and has a better standard of living than all the other countries in the G7 nations. We are very blessed to be here. We are very blessed to work in this industry. And this country affords us freedoms that literally no other country gives their citizens. So no matter what happens tomorrow, it's all good. Let's have a great Thanksgiving. Let's have a great end of the year. Let's have a great November. Thanks for sticking with me for almost 15 minutes on this light news week. Cheers.
Hey, it's KP coming to you live from Dallas Love Field. Big Fed day today and an election this week, and I'll recap both. I have a buddy who I've known since kindergarten, Dave Wilson, who was unfortunately struck by someone who ran a four-way stop sign in West Texas. He's paralyzed mid-chest down, and we have a golf tournament. We raise money for him every year. So I come back and put $1,000 in the raffle jar. We got a bunch of people, and it's also our 30th high school reunion. So we should have a big turnout this year at the event tomorrow night. There's Dickie's Barbecue, which I will be hitting up, and I just slammed a double espresso at Starbucks, so you got 20 minutes before I really get amped up. Okay, let's talk about the Fed first, because that's the most relevant thing to our business. They cut 25 basis points as expected, and with the weak jobs report that we had last week, really weak, they felt good about continuing their campaign. Now, one thing you can look at to see what they're going to do and how low they're going to cut is watch the 2-year Treasury. So that's called market rates. That is the most closely aligned barometer of how much they're going to cut the Fed funds rate. So as of right now, with the 2-year Treasury, hovering around 4%, they have at least another 25 or 50 basis points to go. Before the Fed meeting today, the market bet, when you see on the CME tool, the market bet was only about 43 basis points of cuts this year and about 65 next year. It's 100 bips. So they just total. They did 25 today, and so maybe they skip December and then do some 25 basis point cuts next year. We'll find out. So I watched the news conference, and it was very interesting. We had our senior manager meeting Monday, senior sales manager meeting for our TPO channels Tuesday. Wednesday, Cap Markets call that Gary Malice, my partner at PRMG, Capital Markets and Strategy Officer, he runs the first Wednesday every month. And Thursday today, we had our all retail channel call. And I said something this week, and I said it a couple times, and I felt a little validated in my thought, because the second and third question, what's the guy's name? Mark Timmeros, or whatever his name is, the Wall Street Journal Fed Whisperer asked a question and then doubled down, and then the next lady asked a question. What I basically said is, we're going to see some rate volatility possibly through the end of the year. The stock market is ripping after the election. There's a lot of pro-business thought that's going on with what happened with the results. The agenda's pretty clear from the Trump campaign administration, and they have control of the Senate, and we'll see about the House. I think likely they'll get the House as well. So the Wall Street has certainty. It's not that they're agreeing with the policy, because it doesn't matter who won the election. Wall Street's going to make money. Did you make money? Did you trade? Because Wall Street's making a shit ton of money right now. We're at all-time highs in the S&P. Intel was removed from the Dow component for NVIDIA, which has been a massive trade. If you've been in that for the last couple of years, I used to sell their chip in 1999 at Dell Computers for all the gamers, the GeForce graphics cards. And then Dow Inc., chemicals company, was removed from the Dow component index for Sherwin-Williams. Money still flows. It doesn't matter what goes on with our issues or our emotions or the election or however vested we got in this. We have certainty. And that certainty is bringing a lot of money. The big money index is flowing the last 2 days into the stock market. So the thing that I said that I thought was kind of insightful was that this volatility we're going to see on the 10-year Treasury and mortgage interest rates will likely continue until the next Fed meeting 6 weeks from yesterday. That's when we get the next dot plot. That's when they put their summary of economic projections, and they basically say, hey, here's how many rate cuts we're going to do next year. And we didn't get that today, so we have some uncertainty. They think inflation's still cooling, which we know it is. First line, he said, hey, PCE, personal consumption expenditures, at 2.1%. You strip out food and energy, which oil has been low, that number goes up to 2.7 year over year on the core PCE. But he made it an excuse for that and said there's a lot of rental data that's lagging from a year ago that has not funneled its way into the data. So they're making excuses, and they're doubling down, saying that inflation is still in a good spot. They cut. Labor, they think it's in a good spot. Made excuses about the Boeing strike, and of course brought up the horrible hurricanes Helene and Milton, which of course, thoughts are all of our friends and family are dealing with that. I know so many people personally are dealing with that. It's just terrible, and it does impact the jobs market. But there's other jobs data that came out, like jobless claims today. We're at 1.89 million. I don't like rounding up or down, but this is called 1.89 million continuing jobless claims, the highest number since 2021. That means people who go unemployed are not finding new jobs. That means they're not quitting and finding new jobs, and people who get laid off are not finding new jobs, not as easily. And another metric there was wage inflation. The wages are not going up enough for them to be concerned with the wage price spiral for inflation, but they think that the wages are going up enough to stay ahead of inflation. So let me say one more thing and segue this into the election. Inflation has never stopped going up. Prices have never stopped going up in this campaign. Just because we're down to 2.1% or 2.7%, it's still going up at 2.1 or 2.7%. Food, homes, energy, rent, everything is going up. And that was the number one issue, as always, in the election. People are struggling. Credit card data, Capital One's reporting 4.5% delinquency rates, up from 4.3% a year ago on their credit cards. American Express, which has a little bit higher end clientele, they're up to 1.3%. So these are all at pre-pandemic levels or higher and rising. So the Fed wants to get out in front of that. They think the labor market's strong enough for them to cut and get some money flowing back into the economy so people can catch a break. It's tough out there. Not everyone's in our business with a job that pays well. 65% of America lives paycheck to paycheck. So that's what this election was about, and it always is. James Carville, he's the guy that got Clinton elected. Amazing guy, raging Cajun from New Orleans. I actually seen him out jogging in New Orleans a couple times. He had a phrase: "It's the economy, stupid," and that's what it is. That's what it always is. People vote their pocketbook. Now, I will say another really big issue that was on the ballot was the expansion of abortion rights, and I know that it doesn't really. It's really touchy. Obviously, I'm a male, white male. Hold on, Cecilia. But I know that this gets people really worked up. So I just want to say, for what it's worth, 7 states had it on the ballot, and I believe 5 of them expanded their rights. So Missouri and Montana, Nevada and Arizona expanded abortion rights, and Florida had the majority vote, but you had to get 60%, so it didn't pass, even though the majority of people voted for it. The reason I bring it up is because it's a very passionate single issue for a lot of voters, and regardless of what state you live in or what happened or what you feel about the outcome of the election, those rights were expanded and they won in this election. So there's a little something for everybody in this election. And I gotta tell you, breaks my heart seeing people get all worked up, over things, and I get it. You're talking about women's bodies, you're talking about whatever issue is the most passionate thing you're about, but the election's over, and this community that we create right here on LinkedIn, we all collaborate, we have empathy for each other, and no one's spiking the football down on one side, and I don't see anybody crying on the other. So we have a really strong, emotionally intelligent, high EQ community right here on LinkedIn. So I thank you for being here with us, and I want to give a little bit of hope for some people that may have felt like this election was a total loss for them. At the end of the day, we all got to come together. We're in the fight of our lives every day, but this is still the greatest country in the world to live in. Absolutely, hands down. In our industry, arguably the best one. So really proud to be connected to all of you. Say honored. I don't like saying proud because it's a deadly sin. Really honored to be connected to all of you. I hope to see all of you on the road. We have a big Mortgage Bankers Association, Independent Mortgage Bankers event coming up January 26th through 29th in Austin, Texas. Me and my boy Jason Stanger from Movement are co-chairs, and I hope to see you there. Hunker down with the family. Let's get some people in houses this month. Enjoy Thanksgiving. Break bread together. Don't talk politics. Let's just coalesce. Let's get our families back together. Reach out to someone that you're mad at. Have a great week and a great weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.